All right, so today we're going to discuss the number one question all consumers have while looking for life insurance. Should I get term or should I get whole life, right? So if you are shopping around for life insurance, this will be a great video to help educate and help you decide what's going to be the best fit for you. So let's get right into it. Term insurance. The easiest way to explain this is it's temporary. It's like renting a home, right? Whereas whole life is permanent. It's like owning a home, okay? You'll see here, term is purchased in blocks of time, 10, 15, 20, 25, 30 years, right? Whereas whole life is a lifetime. You're going to have that to age 100 or age 120, okay? Term insurance is less expensive, so if you're in a position where you need a lot of insurance for a little bit of money, term is probably going to be a better fit. Whereas whole life is more costly because it lasts for your whole life, right? We know insurance is priced by age and health, so it costs more because you're going to have it through your whole life. This is why term insurance is best used. Number one, income replacement. We all hear those kind of generic, you need 10 times your income or 15 times your income or 12 or 20. You know, sometimes those are, make sense, but a lot of times it doesn't. A lot of times you actually have to make sure it fits your situation, right? You don't want to get too generic, with your family's legacy. So make sure you either sit down with a financial professional or your agent and make sure that you're coming up with the right number, the right death benefit amount. Also, debt payoff, right? If you have a mortgage, a loan, anything significant that you don't want to leave behind to your heirs, make sure you have enough death benefit to pay that off. And then also business insurance, which is a much more complex topic, which we'll get into at a later video. But these are the main reasons why you would need term insurance. And whole life is best used for cash accumulation or savings, a lifetime death benefit like we discussed, and also for final expenses. Easiest way to explain final expenses is this is for someone typically 50 and above. Sometimes it could be 40 and above, but somebody that needs to make sure they don't leave any type of burden behind on their family when they pass away. Now, we're not looking to leave millions of dollars. This is typically for the end of life expenses like cremation, burial, any type of smaller expenses that come along at death. What's great about this product is typically it's a simplified issue. That means there's no nurse that has to come out to draw blood or urine or anything like that. It typically will let you know on the spot, or typically less than a week if you're approved or not. Now back to term. This is not a savings vehicle. Just so you know that. If you're looking for some type of cash accumulation, it's not going to be in a term product. Most products can be converted to permanent. So what that means is within the first 10 years or for the life of a policy, if that company offers whole life, a lot of times they will allow you to convert some or all of that term into permanent. So just make sure you speak to the financial professional that you're working with to see if this is something that you want, but maybe you can't afford at that time. Make sure that it has the potential to be converted. Now there's other different types of term, like increasing term, decreasing term, cash back term, where you get all your money back. And those are things that you want to speak to your financial advisor or financial professional about. But I want to just stay pretty basic and generic in this video. Lastly, here on the whole life side, it is a tax-deferred savings account, right, which earns dividends. Now, a lot of companies will say, we pay a 4.5% or 5.5% dividend. Well, they may pay that dividend, but you also have to keep in mind the expenses that come along with it. So you may not be getting a 4.5% or 5% dividend. Over time, it can be a 2%, 2.2% dividend. So sometimes not really even keeping with inflation. So you make sure that you know the exact fees and the exact dividend you're getting when you're purchasing a whole life policy. Now there's other ways to get insurance that have tax deferred savings and growth, but today we're going just over term and whole life. Now, one easy way to determine what is the best fit for you is to simply ask, what do I need this insurance for, right? And you can write down all the reasons you have. If the number one reason you need insurance is for income replacement. Let's say, young couple gets married, Bob and Mary. And let's say, each earn $40,000 a year. And Bob knows if he passes away that Mary might need 10 times his income, right? So he would look to get a $400,000 policy and vice versa, right? So that they have enough time to figure out what they're going to do next. Now, if they're on limited income and they only need income replacement, then obviously whole life may not be a good fit for them in that season. But they could look, if it is important to them, they could look for a potential convertible policy where they can convert to whole life in the future. Now, we may have somebody like John who has done well for himself, but he wants to make sure when he passes away that he's able to leave tax-free death benefit to his heirs so he could spend some of his retirement income today and not have to save it all for when he passes away to leave that legacy to his children or grandchildren. Now, if he wants to make sure that no matter what age he dies, he has insurance, whole life would be a good fit, or some type of permanent coverage would be a good fit for him. So again, the most important thing is to first find out what you need the death benefit or the life insurance for, and then you could determine, do I get term, or do I get whole life, or do I get a blend, or do I get some type of term and some other type of permanent insurance. So I hope this video made sense, but again, this is not to help you to make your final decision. This is just to help you to be more informed so that when it comes down to having that conversation with your agent or financial professional, you're more educated on making that final decision. Hope this helps.